Good afternoon, everybody. This is Eden, your local realtor with RE/MAX Premier. Thank you so much for coming to pretty much learn a lot about mortgages today. Today, I have in the house Mandy, a mortgage broker, together with her boss, I guess, her partner, Parminder. So please go ahead and introduce yourself to everybody.
Hi, this is Parminder from Akal Mortgages. I'm a mortgage broker with Akal Mortgages from last 3 years. Akal Mortgages is in the business from last 23 years. Our partner, as I say, we are part of Mortgage Alliance. It's in the industry from last almost 20 to 30 years ago. So in this last 23 years, we have grown a lot, massive in terms of we are number 1 in Ontario and number 3 in Canada.
That's awesome.
And I have Mandy with me. Mandy, you want to introduce yourself as well?
Sure. Thank you so much, Parminderji. Hi, everybody. My name's Mandy Khurana, and I am a mortgage agent with Akal Mortgages. I work along with Parminder Patti. He's my team lead. And I've been in mortgages for about 1.5 years now. And I look forward to being able to answer any questions you may have. And
Great. So
yeah.
Mandy, 1.5 years. What's your background before that?
To start with, I was a programmer back home.
Oh, okay.
And then once I moved to Canada, I took up the education field. So I'm kind of an educator. And coming to mortgages, I have always been infatuated. Technically, I started with, okay, if I have to grow in real estate, I need to know more about the mortgage part of it.
There's a passion behind it. You want to know for yourself.
Yes. Yeah. So I need to educate myself before I can educate other people. That's right. I found it interesting. And since I'm good at numbers, I should say, so I thought, you know what, might as well apply my skills here as well.
Good for you. Awesome. That's great. So I guess the big question right now, I mean, in Canada, and mortgage laws change, interest rate change. So just recently, the federal government has implemented, they say, a product to help the homeowners that were struggling in carrying their mortgage payment, because the interest rate is going to be totally different from what they had before. So their monthly payment is going to be a lot higher, correct? So what are really the items that the government implement to help the average homeowner?
Okay, I'm going to take this question. If the clients who are already in the mortgages and their renewal is coming up, maybe they have a mortgage with 2.2% in like 5 years ago.
Exactly.
But now the hike will be, let's say, 6.5 or 6.4%.
That's right.
What the average rates are right now. Mm-hmm. So government has come up and they said for the renewals, there's no stress test. Mm-hmm. If a client got the mortgages a few years back on insured and insurable, mm-hmm. then they can go to any lender. Mm-hmm. They can have a better rate without being stress test on those mortgages. I will add into this one. We have quite a bit products in terms of, because the interest rate has gone up, the eligibility is not there for the new homeowners. We work with most of the major lender, and we have alternative lenders as well. So we are working with those 8 lenders where if client do not have enough, like let's say they don't have 20% down payment, they can have a 5%, and we have a shared equity plan as well on those with the brokers, with the lenders. So I'm gonna give you a little bit more on this one for the new homeowners, new home buyers. Let's say if the client do not have 10% or minimum down payment of 5 to 10%, where they are not eligible with the major banks, let's say CIBC, TD, and Scotiabank. We can take them to alternative lending side, where we can have 10% shared equity, where 10% is clients and 10% is shared equity plan. They can buy a property from $500,000 to $2.5 million property.
Wow, that's a good one. So with 10% down,
yes,
if they're qualified, they could purchase between $500,000 to $2.5 million.
Yes. So with the insured mortgages with 5 to 10% down, I'm going to repeat myself, with 5% is up to $500,000, and over that it will become 10%.
Yeah.
So, and there's a we have to look at how much income they are making. If rule of thumb is multiply by 4, whatever income they're making, multiply by 4, assuming that they don't have any debts. So let's say $100,000. If somebody is making $100,000, they can go up to a mortgage of $400,000. But in this case, if client have a, if you want to buy a property for $600,000, he can put 10% or 5%. We can have our shared equity partner come in, and they can put 5% to 15%, and we can get the mortgage up to $600,000. With that $100,000 income, what he was making, we can get him a property of $600,000 with a mortgage of $480,000 easily.
So they will have a partner to purchase the property together with them, right?
Exactly.
On title, you have both names.
Okay, so shared equity, they have their own way to do this thing.
Right.
Client will have their name, and shared equity will have their own name as well.
Right.
So what we suggest that client, whoever is onboarding on this program, we let them do a discovery call with them, so they can have all the questions up front.
Sounds good. Yeah.
So they can ask them like how we can do that. What happened after 2 years when I wanted to sell this property? What happened if I wanted to take over your share? What were my costs? So in details, when we sit with a client, we make sure that client understands this part. And we onboard them with a shared equity partner. They have a call with them. Then we will take over the client and start working on the mortgages side.
So in other words, just before we start shopping for the house, there's a lot of items that you have to agree on, and also you need to know what is the maximum they want to spend, what the monthly payment would be, and also the contract between the shared party and them, correct? Yeah.
Yes. Yeah. So when we start with the client, we will have an initial meeting with the client. We always prefer our partners, realtor partners, come with us too, just to see what max we can get them.
Yeah. No,
okay,
that's
so
awesome.
In this case, when we know we want to be on the same page with our partners, with our client, and we want to make sure that everybody's on the same page. When we know that client can eligible for this much, we'll give them an average of let's say a ceiling, like this is best we can do in this case.
No, that's awesome. I was just, as you're saying this, I was thinking of a particular client, right? Let's say the property is a triplex. Does this apply only for single family home, or it could be for multiplex, like triplex?
Okay, so yes, as per shared equity partner, they can go up to 3plex and 4plex, but they wanted to make sure the client is living in that property as well.
Is that right? Yeah, that's one thing you need to know.
So,
okay, that's awesome.
If the client is living, it's an owner-occupied rental, they don't have any problem. They have some restriction on the area side that we can discuss when the client is come up front and they want to see, okay, this is the area they were looking, then we can look at it if that area is a lending area of that shared equity partner.
Yeah, and you do that for condos as well?
Yes, we do.
Excellent. Very good. So you told us about the stress test with the new rules regulation. And again, they're saying they could shop around from banks to banks for rates, which in my opinion, there isn't really much difference between the banks, is there?
There are some mono lenders. They are very deep discount.
Really? What about penalty? Penalty, do they?
Exactly. I was going to come on that one.
Yeah.
The rate is not what we sell the service, we sell the knowledge to our client. Let's say I can give you example where the client can go for 5 years and he can have a best rate of 5%, and right now it's 5.4%. So he can earn 40 bips, like 40 cents more on him or his mortgage. But what happens if they want to sell a property after 1 year? What will be the penalties on this?
Right.
What are the terms there? What are the amortizations are there? So we want to make sure that we sit with the client first. We want to make sure that what client's need is, what client budget is, what he's planning for next 5 to 6 years.
Right.
You're going to live in this property for a longer term? I don't want to give them 5 years term.
Right.
I know you're recording this one. If you can go on a Google and check the penalties, the penalties what some of the banks were charging was, way more than what client can even afford those things.
Exactly.
So I wanted to sit with the client. I wanted to tell them, okay, are you looking for a fixed mortgage? Are you looking for variable mortgage? Are you looking for 20 years term, 30 years term? How long term you're looking for? What amortization you're looking for? There's a lot of variations comes in when we are doing pre-qualification or we are looking at pre-assessment. We wanted to make sure what client need is. We cater that kind of we tailor that kind of needs for the client.
That's awesome. Now, is it wrong? I heard they would even avoid penalty if somebody was going to switch with the government. Did they did that or no?
Okay, so penalties. I just
if
wanted
they switch from bank to bank.
Okay, switching is a little bit different. If the term is finished, you can switch. There's no penalties.
Oh yes. I forgot. They're renewal mortgage company.
But if the term is not finished and these clients still want to switch it, they will take it's every lender is different, but maximum up to $3,000. Some of the lenders do advertise maximum of $3,000. They can absorb that kind of cost.
Excellent. No, that's great information. Now, to Mandy here, in terms of the amortization period, did I hear they were kind of increasing that amortization period so that the payment wouldn't be astronomically high all of a sudden on the person that's renewing the mortgage? Are you familiar with that?
Yeah, so how that basically works is a lot of lenders, what they're doing is, let's say the amortization was 30 years, they're increasing it so that the monthly payment, what's happening is now the borrowers, a lot of times, the amount that they're paying per month, which covers the principal and the interest. Now, because the interest rates have gone up so much, it's technically either just paying off their interest or not even the entire interest amount in that mortgage payment that they do per month.
Right.
Let's say they're paying $3,400 as the mortgage payment.
Right.
And with interest and everything calculated, part of it goes towards interest, part goes towards the principal.
Right.
But now what has happened is this entire amount is only going towards towards the interest. Maybe the interest is about $3,600, let's say.
Right.
Now that is not covering the interest as well. So now, to make it easy for the borrowers and to safeguard themselves as well, what they're doing is they're increasing the amortization. And Parminderji, correct me if I'm wrong. And what they're doing is they're including the extra interest into the principal, dumping it in there, and increasing the amortization so that the payments are low, but now the loan amount has increased because now there's more interest in it.
Yeah.
And
So-
they are holding it for longer years. Parminder.
Could it be the principal remains the same, or actually more debt could go into the principal? Now,
Yes.
I will answer that one. Recently worked with a client. Their mortgage is from RBC, and I have seen 78 years of amortization on that.
what?
So
70 years of amortization?
78.
Wow. Okay.
So So what happened? Client bought this property 2 years ago when the interest rate were about 1.5%. What he got variable 1.5 prime minus 0.90. Now the interest rate has been increased. The mortgage amount is not the principal and interest what he was paying was not actually covering the whole mortgage after the interest rate has gone up.
Right.
So they basically increases the amortization to cover that part.
I see.
But at end, when still it's going up, the payments are going up. So they have another bucket where it says you have $25,000-$30,000. I don't have exact number. That amount you have to pay on the top of this amortization. So bringing back to 30 years, maybe after it's about bank policies. After 2 years or 3 years, when renewal will come, the client has to work on this amortization to bring it back to at that level where he can pay off this mortgage in 30 days. There may be a lump sum payment, or there may be an increase of payment. This is bank-to-bank policies.
Yeah, it's not. It's like reverse mortgage. You're increasing the loan amount you owe.
No, reverse mortgage is different.
No. But what I'm saying is your debt is growing.
Exactly.
Yeah, which is what reverse mortgage does. You take the money out and you use it. Here you pay less money, but because of that many years, the interest rate sooner or later is going to pile up on the money you owe already.
Yes. So bank will come up. I have seen some Bank of Montreal, year-end letter they're sending to their clients, and they're asking them to pay back a lump sum amount of, let's say, $10,000 or $15,000, or you can increase your payment. Let's say it was $3,000. They come back. They said make it $4,000 to be on track. You were 2 years ago. If you want to be on track of, let's say, 25 years amortization, you have to increase your payment from $3,000 to $4,000, or you can put, let's say, $20,000 on your mortgages to cover that extra, interest payments, which is being piled.
Right. Well, you know what? You guys are very, very knowledgeable with this product. So anyone that would like to have a discussion, because every person's situation is different, right? It's just you have so many great products, especially I'm so excited about this partnership to own a home where we're really struggling with most people not qualify, or have enough down payment to get into the real estate business. So that product comes in so amazingly good. Thank you so much for coming out. Unless you want to add anything else to this interview, I'm going to say goodbye. Anything else you want to add to this?
Yes.
Sorry.
My apologies. I'm going to take 2 minutes more. What I wanted to say about mortgages, we do, as I said, we do tailor mortgages. We wanted to make sure clients need. We have a good communication. We try to get more information how we can get them approved. We have thousands of cases where they went to the bank says no, and we have got the mortgages with a similar lending partners. So it's just a way we communicate.
Yeah.
Second thing, we have a products like, we work with most of the banking, most of the alternative lenders, all of the monoline lenders. We have mortgages with we have a partnership with the private lenders as well. The products we have, you might not even see that. Reason being, we have exclusive lenders only working with the car mortgages. So as I said, shared equity. This shared equity partners are only working with two main brokerages in Ontario. So one of the brokerages are car mortgages.
Wow, so glad to know that. That's awesome.
Exactly. So, I just wanted to let you know the BMO is coming into our broker channel as well, and we are the only brokerage in Mortgage Alliance right now who got access to BMO. So it's a lot of we're doing a lot of business with the lenders. We have a good relations with them. We acquire quite a bit market in the mortgages. So in that case, products are there. We just need to sit with the client to get them approved on as different products.
Well, I'll tell you what. As you're speaking, I'm trying to invite people who are interested in getting into this equity share. We could even have a specific seminar for them, right? Because there's a lot of people that feel like, how do I get into the housing market? I think there will be a great product. So we're going to put a link here for people to sign up for that seminar, and then we'll hold a seminar to specifically talk to that group where to start and how to go. Fair enough?
Sure. And I'll just like to summarize one thing, that we at Akal Mortgages, we will not commit. When we say yes, we stand by a promise. Otherwise, we will never commit to something that is not possible. So we don't give false hopes, right? And
integrity.
Yeah.
There's integrity. Well, that is the number one thing for business. Well, thank you so much. And I'm so glad that's the case. We'll forward your number, and I'm sure you're going to get a lot of calls, but most any product, anything that you have a question in regards to mortgage, reach out to us, and I'll be happy to introduce this amazing Mandy and Parminder to be able to help you out in terms of acquiring the best mortgage you could possibly get. So thank you so much for listening.
Thank you.
Have a wonderful day. Thank you so much for coming out, and we shall do a lot. We're going to help a lot of families in 2024. Thank you so much, and you have yourself a good day. Take care.
You too. Thank you
All
so
right.
much for inviting us. Thank you.
Thank you so much. Bye-bye.
Wonderful. Take care.
Bye-bye.
Bye.